Okay, guys. Happy New Week. This is the weekly outlook video for this week, 16th, Monday, 16th to 20th, January 2023. As usual, we are going to start with the dollar index with DXY. Let's go to the monthly time frame. On the monthly, I have been calling your attention to this monthly order block. Okay. Now price closed last week. Okay, no, this is still a monthly. On the weekly, price closed below the main threshold of the yeah, we reached the main threshold somewhere here. Yeah. So price closed below the main threshold of the order block last week, and that makes the order block less probable. It makes it's less likely to hold. It doesn't mean it cannot still hold. I mean, the order block becomes invalidated when we get a close below it. Okay, when we get a close below the order block, when price trades below the order block, that's when it becomes invalidated. So, um, will it hold? I'm not sure. Honestly, I don't know, but um, it won't be nice if we lose this other block. Okay, if price trade through the other block, I don't think that would be nice. Okay, it can set a catalyst for further drop down. Okay, it can that means it will have to fill this fair value gap and potentially drop to this level. Okay, because if we draw a fib from this low to this high, that would be optimal trade entry. Like this level would be optimal trade entry. Let me do that from here to that. This is optimal trade entry. This is 618 just after this fair value gap. Okay, and so if we lose this, that means it's still going to continue to the downside to at least completely fill this fair value gap and this tiny one here, and somewhere around this OT level. Okay, so I really would love to see this other block not get taken out, but obviously the market doesn't care what you think. So let's go to the weekly time frame. Now another thing I'm looking at on the weekly, this is the order block. If we refine the monthly order block to the weekly, this one right here, that's the order block. Price is still trading somewhere around the middle. It has closed below the middle, and that makes less probable, like I said. But let's see. Let's look at the daily. If we refine it to the daily time frame, if you refine this to the daily time frame, price is yet to close below the main threshold of the order block. Okay, because if we refine this to the daily, these three candles would be the order block. Okay, this one, two, three candles, the three of them together would be the order block. So if we drag it out in time, let me do that. If we drag this out in time, if we want to measure the midline, we'll use, yeah, I mean, it could still hold, guys. It could still hold. Um, oh, this is looking really dirty. I don't like my chart looking like this, but um, I hope you can see. Let me make this maybe, yeah, different color. Can use be just this from this the body of this candle to the body of this, the high of this candle, not the high like the open of this candle, this one right here, this candle. Okay, the body, and then drag it down to the body of this one. The midline price is still yet to actually trade into it. Okay, so if we refine the monthly order block down to the daily, this is it right here. So it is still very valid. All right, I hope that makes sense. Okay, it is still very, very, very valid. Okay, and this is also a breaker. This candle right here is also a breaker because it's a swing low. This candle is higher than this candle. This candle is higher, so this is a swing low. The price traded down below the swing low, traded back above it. So price should not close below this candle. Okay, this the low of this bullish candle right here. Price should not close below it. Okay, shouldn't get a close below it. A close below it would invalidate the. It can trade down. You can sweep it, like can trade down, but it shouldn't close below it on the daily time frame. All right, so I'm still looking for the possibility of a reversal here, and we have the draw liquidity, we have this volume imbalance, right? This volume imbalance right here, the open of the low of this, the close of this candle and the open of this one. Okay, that is a volume imbalance. Okay, and we also have a fair value gap here, which is also a breakaway gap, and we have this one here as well, fair value gap, volume imbalance. So the draw liquidity is to the upside, so I don't know if we'll get it. I'm like 80% convinced we should get a bounce from around here to at the very least trade to this volume imbalance, fill this fair value gap, and then trade into this volume imbalance. Whether we get a rejection there to drop down to take out this low, fill the fair value gap I mentioned on the monthly time frame, or we would take out this other block and then continue to the upside, because we also have a relative equal highs in here, this high, this high. Okay, so that is also a draw on liquidity. Okay, so basically draw on liquidity for this week is to the upside. We have sell side here, but it's not looking interesting for me. Okay, it's not looking interesting for me. I think my expectation is that we would find a bottom somewhere around here. So at the very least, drive up to this volume imbalance. Okay, this is not a breakaway gap. So if price, so you wouldn't expect price to drop, come back to this level if bearish. Okay, if the market should trade back to this fair value gap, it is more likely going to use it as support to attack these relative equal highs. Okay, so my expectation is a trade up, perhaps a rejection, that would depend. I don't know, but I would like to see it hold price. Okay, I would like to see it hold price. That is what I'm anticipating in the coming weeks. Okay, everything might not happen this week, but in the coming weeks, that is something that looks interesting to me. Let's go to the 4-hour time frame. So in the 4-hour time frame, let me get rid of this. This fib is a TR candle. Okay, this is a TR candle that I mentioned last week on the Telegram chat. Okay, just look at this 102.469, 101.849, like from that high to from that price level to this price level. That is my TR candle on the daily time frame. That's a daily TR candle. And we see from here, we also have another one down here as well. Okay, but we can see, look at how price kept closing above the midline of the TR candle. Okay, kept closing above it. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 4-hour candle. Okay, finding a hard time to close below the midline of the TR candle, and now eventually traded down to the low, but haven't closed below it. Okay, so if we get a close below the TR candle, then I would be more convinced that we are likely, well, of course, we still have another TR candle down in here, but preferably I'd like to see this one hold. Okay, I would really like to see this one hold. Okay, let's see how that goes. We have another block in here on the 4-hour time frame as well, but I would like to see this other block turn into a breaker. Okay, let's go to the 1-hour time frame. On the 1 hour, we see the same thing around the TR candle. We see price traded down, had a bounce, traded down again, had a bounce, and then came again 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 candles, failing to close below it, and now we don't close. So if it should flip this midline of the TR candle into support, um, that for me would be bullish. Okay, but at very least for this week, I expect that price should trade to this volume imbalance. Okay, so that's a lot of upside. We have another thing here I want to draw your attention to is we have where is my here? We have three drive, one, two, three. Okay, so we have three drive, one, two, three, and that is significant. When you have three drive before is a low, normally you would expect that that low should not be taken. Like, I mean, on the monthly time frame, that's May low. Okay, I can't get this to show, but the monthly time frame. Okay, let me just show you guys. Okay, so this low right here. Okay, I think it's on the weekly. Yeah, this low. Okay, so if we're having a three drive in here, then it means that this low is unlikely going to be taken. Okay, so let me go back to the 1 hour time frame. So I'm more leaning more to the bullish side. Okay, um, obviously you will have to watch to see what happens with this fair value gap and this volume imbalance. Those are bearish PDR rays inside a bearish trend. Okay, on the daily time frame is bearish. So you would expect that bearish PDR should hold price. Okay, but at very least, I will be looking first and foremost to take a short trade on EU and GU onto DXY trades into this volume imbalance. This is a volume imbalance. The this one um is the daily fair value gap. Okay, so that is my draw liquidity for this week. So I'm expecting that we will get something like this. We have a fair value gap in here now, so I would expect a drop down below here. um am I doing okay? So perhaps this other block gives us a this is also a breaker. Okay, this is a high, this is a low, this is a higher high, so this is a breaker. So if price is bullish, price should not close below this 1 hour. We shouldn't get a 1 hour close above this line if the market is bearish. Okay, so if we are going to continue downward, we should not get a close above this line. Okay, because this is a breaker, it can sweep it, but it should not close above it. Okay, so this is looking quite interesting. Okay, let's see how that plays out, but I wouldn't. Maybe this might just provide a catalyst for a retracement into this other block to continue to the upside, take out this high and this volume imbalance. Okay, and I may be wrong, but right now this is looking. Um, I'm tilting more to the upside. Okay, I'm tilting more to the upside, and most times on the weekly time frame, when there is a draw on liquidity, usually price tends to rally into it before it then continues that trend. Okay, so even if this is going to be a temporary, um, even if this is going to be a temporary move, I mean this is still a lot of, this is a lot of upside. Okay, so my expectation, and if you look at this as well, this is looking like a market maker buy model. Okay, initial consolidation, run to level of support, smart money reversal, 3 drive, 1 2 3, smart money reversal. This is fair value gap, so perhaps we're going to get low risk buy around here, then reaccumulation and then distribution above this high, okay, above this relative equal highs. So that means that there is a high probability that this fair value gap could be traded into. Okay, that means it can be traded into. Okay, we'll have to wait to see how that plays out, but I'm leaning more to the upside right now. This will be my expectation. Um, a drop lower to fill this 1 hour fair value gap, provide a bounce. I have an order block right there as well. Price has taken the previous day low and rallied up. If we should trade above this high, I mean that is going to be very bullish. Okay, so that is my expectation for this week. A drop down, um, something like that. Fill this fair value gap. This will become a breaker if price should trade above it. Okay, so you would expect that if price should drop down into it again, it should provide a and then fill this one, the volume imbalance, maybe a small retracement, and then this one. So this is my expectation in the coming weeks. I may be wrong. Obviously, I may be wrong. Last week, I was hoping that the fair value gap, the weekly fair value gap would hold price. Obviously, it has failed to hold price. That weekly fair value gap is already invalidated, but it can turn it into support. It could rally up and then turn it into support. That would be this fair value gap right here. Okay, so if price should rally up and then turn this fair value gap into support, I mean that would be nice. Okay, so but right now I'm tilting more to the upside because number one, this is looking like a um it is looking like a market maker buy model. Okay, even if we reject it to continue lower, I don't know. Okay, I will have to see how the PA develops there. But for now, when price gets to this level, I will just have to watch to see what is actually going on. Okay, so consolidation, initial consolidation here, run to support. You can see this run away, way to run, and then retest the initial consolidation, drop down for smart money reversal. So I'm anticipating low risk buy around here, and then accumulation, reaccumulation, and distribution above these relative equal highs. Okay, I think I should mark out these relative equal highs. And usually when you have equal highs just before a fair value gap, that can be a strong catalyst for a drop, okay, from my experience. Okay, so we'll likely see a drop, but how far down will it go? Okay, I don't know. Will it form a support around here to continue upside, or will it continue downward to take out this low? I don't know. Okay, I don't know, but let's see. So that's my expectation for DXY. Let's see the low time frame and let's see what is going on here. So on the low time frame, market opened. Okay, market open. We had Judas swing to the downside. Okay, now let me chip this in. Whenever the market opens and you see an almost immediate drop down, okay, an almost immediate drop to the downside, it's a Judas swing. Okay, it can give you an indication that price might be bullish for that. See the reaction to the midline of the TR candle. See that? Okay, so I would like to see this turn to reject from here. Hmm, have this downside here. So it could reject from here. Um, this is looking quite interesting. Because now we are having a Judas swing to the upside. Okay, this is a midnight open price. Price has rallied above, although it dropped below it first. So this could be accumulation here. All right. We'll have to wait to see. I think this is likely to provide a rejection. Okay, like I mentioned on the 1 hour time frame. So when it rejects, does it reject to form a there's really nothing significant down here that I'm really excited about that I think will price, but hmm, this is quite interesting. Okay, but let's wait and see. I'm still going with what I have on the 1 hour time frame. This is looking bearish on the 5 minute time frame. I think that will get a drop here. Now, if you now get a close above here, that means Monday. If you get a close above this level, that means that the algo would enter into a seek and destroy environment. Okay, if we should close above this level, that means that it is likely going to enter into a seek and destroy environment and will just be going up and down for the rest of the day. Okay, so that's my expectation for DXY. I like to spend a lot of time on DXY because basically DXY controls the entire market. Okay? So when you have a strong understanding of what price is doing, you can easily understand better what is going on in the foreign currencies. Okay, so this can provide a potential long on EU and GU. This, if you take out this low, this will become a breaker. Okay, so to take out these relative equal lows at the very least. Um, yeah, this relative equal lows perhaps we'll have to wait and see. We'll have to wait and see. Okay, so let's go to Euro EU. Let me go to the um weekly. Anything significant on the weekly time frame? You've taken out this high. Okay, this is a monthly high. Okay, so we've taken out a monthly high. Ideally, you would want to say rejection. Ideally, okay, ideally you would want to say rejection, but if we go to the daily, we have this relative equal highs here that I mentioned last week, that if we should get a close above this level, price is more likely going to rally up to take out these relative equal highs. But I said I wouldn't want to see that happen. Okay, I wouldn't want to see, because if we should come to this level, then that means it is more likely going to fill out this fair value gap and this volume imbalance, which can happen. Okay, which can happen, but I would not want to see that happen. Okay, I wouldn't want to see that. This is interesting. We have the daily fair value gap here. This is going to be a draw on liquidity. Okay, and another thing I would draw your attention to is that we have we have 1, 2, 3, 4, 5. We have 5 consecutive up close candles, and when you have that, generally it's, once you are having 3 to 4 up close candles, you want to tilt more to the downside to the bearish side. Okay, I wouldn't consider this to be a breakaway gap just yet. This one, this tiny one right here, yeah, I would consider that to be a breakaway gap, but this one I wouldn't consider this to be a breakaway gap just yet. So I think that I'm leaning more to the downside. Okay, I'm leaning more to the downside because depending on what happens on Monday, okay, by Monday we should have a really good idea of what is going to happen. Okay, now let me give you a quick tip. Once Monday's range has formed, if price should trade above Monday's range and closes above it on the 1 hour, 4 hour, on the daily, okay, there is a 75% probability that the market will continue to trend upward for the rest of that week. Okay, except the exceptions are days in which we have a seek and destroy environment. Okay, if it is a seek and destroy week, obvious price will just be gyrating up and down, and that wouldn't hold true. Okay, but in general, when Monday's range is formed and you see price trade above Monday's range, on Tuesday or on Wednesday, price is likely going to continue to the upside for the rest of that week. So this is Monday's range. If we should trade up above it and close above it, especially on the 4 hour and daily, okay, that means we would most likely get a run into this equal high, as I mentioned last week. Okay, but this is a draw liquidity, this is a fair value gap, this is a draw liquidity on the daily time frame, so we could also get a drop down. We have a tiny fair value gap here that I'm just seeing, this one. Okay, so we have this tiny fair value gap here that could also be the catalyst for a bounce into this equal high. Okay, but right now the PA is not so clear, but obviously this equal high is a drawn liquidity, this is also a drawn liquidity. If price should trade downward into this level, we should get a long to this equal high. Okay, because when you have a retracement into fair value gap, daily fair value gap, you would expect to see a bounce into the opposing drawn liquidity, which is this equal high. Okay, but I'm not so certain that this equal high will be traded into, because price has traded above a monthly high, and there's a lot of liquidity above monthly highs. Okay, there's a lot of liquidity above monthly highs, and um let me check the 4 hour time frame. On the 4 hour, it's really quite clear. It's really clear on the 4 hour time frame. Obviously, just mark out your levels. This is an order block. This is a high. This is a low. This is a higher high. Price has taken liquidity above this daily high, equal highs. If we should trade down below this level, okay, this is going to become a breaker. So you would expect the breaker to hold price, um, to reject price to the downside. Okay, so that's okay. So this level, if this low is taken, for us to have a run into this equal high, it will be better for this low not to be taken. Okay, though price can use it as a liquidity, but especially considering this tiny little fair value gap in here. Okay, but let's see the 1 hour time frame. The 1 hour is quite clear, really quite clear. Ideally, you wouldn't want to see price come to this level. Okay, ideally, price should not come here. Okay, ideally you wouldn't want to see price drop it. Look at this price action. Okay, see how price rallied up and instantly rejected, as I mentioned last week. Okay, I mentioned that if we should get a close above this level, we should get an instant rejection and potentially a drop down to the downside. Okay, depending on CPI. Okay, you can see how it rallied up, closed above it, and instantly rejected. Amazing, sweet price action. Okay, so price has taken these relative equal highs, and we are seeing a rejection. So basically, what if you get a break in market structure, and provide we have this fair value gap in here, it should lean more to the downside, okay, at the very least to this fair value gap. And also, this is also looking like a market maker, um, market maker sell model. Okay, remember if you've seen my video on the market maker sell model, remember I mentioned that when you are anticipating that price should drop into a level, okay, one of the ways you can anticipate a market maker sell model ahead of time, when you have a level like this 1 hour fair value gap in here and this equilibrium of this TR candle, okay. Just focus on this 1 hour time frame, okay. Since I haven't explained the TR candle, which I would say explain, but this is a level that you would expect that price should trade into, but it failed to. Okay, just consolidated for like from Monday till Thursday. Okay, and failed to drop into it, and then rallied up, came back to retest the consolidation range, rallied up again. Now we are having what looks like a smart money reversal. It's not yet a smart money reversal since we haven't seen a break in market structure, but um this is looking interesting. This is a market maker. This is a potential market maker sell model. Okay, so this could be initial consolidation run to a level of resistance, and now we are anticipating smart money reversal. So this can be smart money reversal, or it could also trade up to this equal high for smart money reversal. So the PA is not yet clear. Now we don't know yet, but let's wait and see what happens. Okay, let me see the 5 minutes to see what is going on at the moment. Okay, ideally, like I said, I would not want to say close below this low. um I don't like the low time frame PA. It's not looking exciting at all. I don't like this PA on the low time frame. It is giving me the vibe of a seek and destroy. Okay, because if the market close below this level, okay, um that's quite. You have sell side in here. Ideally, I wouldn't want to say close below this level. Okay, preferably if we get a bounce from here, that would be nice. Okay, so if you get a bounce from here, that would be a nice PA for the day. Okay, hmm. I don't want to get it ahead of myself, guys. I don't want to get ahead of myself. I would like to, but preferably because this is a setup that I like. This is when you have the 1 hour TR candle price has closed above it and it is returning back into it, you would want to see it close below it. Okay, don't want to see it close below this range. Okay, so ideally I would prefer to see price bounce from here. If it closes above and then closes below it, that would be an indication that price is going to enter into a seek and destroy environment. Okay, and we can see from here also that we have this consolidation here. Price has traded below the midnight New York open price. So ideally, you would want to see we're inside London open kill zone. So ideally, you would want to see a bounce from here. Okay, and we have this TR candle in here. So price could also, but this is looking bullish to some extent right here. Okay, right now this is looking bullish. Okay, it's looking like we would run up right now based on what I'm seeing in price, because we're already making lower lows. Okay, we're making lower lows, lower highs. So and price now if it closes below this level, I'm just going to sit on the sides for now and just watch to see what plays out on Monday. Okay. Obviously, I've not started trading for the year. I don't intend to trade until 1st of February. Okay. That's when I will start trading. Okay. But this is looking interesting on the higher time frame, like the 1 hour. I'm favoring a downside, but on the 5 minutes time frame, 5 minute time frame currently is looking a little bit more to the upside. Okay, it's looking a little bit more to the upside. So let's wait and see. And then pound. On the pound, pound is really quite simple, really quite straight to the point. For me, this is bearish for the week, in my opinion. We have this daily fair value gap that I mentioned last week that price is likely to trade into. But however, I didn't want to see a close above this 0.5 level. Okay, that was my analysis for last week. We've seen a rally into it. As I mentioned, price did not close above that level. It didn't even come anywhere close to it. Okay, but for this week, I think it would be nice if price should trade into this fair value gap. Okay, but look at this breaker, this look at this candle, this down close candle. That is a breaker. Okay, and usually you don't want to see price close above a breaker. Okay, obviously when price traded below it and came back into it, it has already provided a rejection. Okay, so that's already an opportunity for smart money to take out their underwater trades. Okay, but preferably I would like to see price, fill out this fair value gap. This is consequent encroachment of the fair value gap. Okay, so price has traded into consequent encroachments and we saw an instant rejection. Okay, let's go to the 4 hour time frame. Now the 4 hour is looking interesting. So the 4 hour fair value gap has been completely filled. It has been completely filled now into consequent encroachments. Okay, 4 hour looks really clean. I mean, the invalidation level would be is pretty straightforward. For me to switch bearish, um, if this low is taken, okay, if this low is taken, this will become a breaker. Okay, this down close candle right here will become a breaker. That means you would expect that price should not trade back above it or close above it. Okay, so that's the level to watch. I'm bearish on GBP. Like I said, I'm leaning more to the bullish side on DXY. Obviously, if you are bullish on DXY, you will be bearish on EU and GU. Okay, so um this is a daily fair value gap. Okay, and we also have SMT divergence between EU and GU. Price GU is still unwilling to make a new high. Okay, so it is looking bearish. That is bearish. Okay, not like it is bearish. Okay, so this is a bearish SMT divergence. EU as making new highs, GU failing to do the same thing. That is a crack in correlation. So that's bearish, guys. That's bearish for me. So let's go to the 1 hour time frame. On the 1 hour time frame, this is the 0.5 level I said I wouldn't want to see price trading to. Maybe just above this lower 0.5 level last week and then rejection from there. So you can see as price traded into the 0.5 level, closed above it and instantly rejected to take out this low as I mentioned last week. Okay, now it created relative equal highs, traded into consequent encroachment of the daily fair value gap. By consequent encroachment, I mean the mean threshold, okay, like the middle of the fair value gap. Okay, so you can see that's traded into the middle, rejected from here. If it starts to break structure, obviously that would mean that it is going to continue to the downside, and this is likely going to get filled completely. Okay, so that's my expectation for this week. From next week, I'm going to be including the, BTC in my analysis. Okay, BTC. Should we check US 500? Let's check US 500. Go to the daily. So on the daily fair value gap has been filled, completely filled, closed above it. We are currently at the midline of a weekly TR candle. We have this tiny little volume imbalance right there. I'm bearish, guys. This is bearish for me, in my opinion. Okay, we still have this tiny little, we still have this fair value gap here on the 4-hour time frame that could be traded into, but Monday's range would, Monday's range, that's why I like to do my analysis after Monday's range has formed. Okay, but this is basically an expectation or a general overview of what I'm expecting for the week. But um um it's generally best to wait for Monday's range to form to have a much more accurate view of what the market is likely going to do, because every new week is sort of different from the previous week. No, it's the previous week can lead into the week that follows it, but generally the things can change. That's what I'm trying to say. The sentiment, smart money sentiment can change. Okay, their expectation of the marketplace can change, and the algo can change. Okay, so not like the algo will change how it delivers price. That's not what I mean. What I meant is that the target of the algo can change, okay, on a weekly basis. These guys control it. If they feel like, okay, now they want to take price down, all they need to do is calibrate the algo, outline the levels they want to trade into, and then it will do that. Okay, so we have to wait for Monday's range to form, but right now I'm leaning more to the bearish side, okay, because this is also a market maker sell model. We have initial consolidation run to a level of the way it rejected from the midline of that TR candle. Okay, this is a daily TR candle. So the way it rejected from the midline, rallied up, use it as support. You can see that. Use the midline as support and then rallied up to the high of that daily TR candle. Now it is now inside of the midline of the weekly TR candle. This is a high, this is a midline. Okay, so ideally you want to say rejection from the midline, okay, but you wouldn't want to say close above the midline, okay. So you want to say close above the high of the candle, of the TR candle, okay. So I'm leaning more to the bearish side on US 500. Okay, so I'll be looking to see if I can get a short. I'm not trading here, like I said, just maybe paper trade somewhere around here, depending on how Monday pans out. But I'm leaning more to the bearish side. Okay, this is also looking like a potential three drive. Okay, this is a high, this is a higher high. So maybe if you get a run again into this fair value gap, I think that would be quite interesting. Okay, we check the 1 hour time frame. Price has traded into the volume imbalance. So volume imbalance are now closed below it. Let's see what Monday's range forms. Okay, this is also a breaker. So ideally you would not want to say close below the breaker. And this candle right here, that's a 1 hour breaker. So if we extend it out in time, see how it coincides with this fair value gap. We expect that that level should hold price, but I wouldn't be comfortable taking a long here, except if I'm scalping, maybe on the 1 minute, 5 minutes. If I'm scalping and I have a near target that I think price is going to reach for. Okay, but right now I am tilting more to the bearish side. Okay, I'm tilting more to the bearish side on US 500. I think it's going to form a top today or tomorrow, and then trade down to kickstart the second leg of the market maker sell model. Okay, whatever, what you should know is that um no matter how far up price goes up, just know that it is going up to come down. Okay, just bear in mind that this is a sell model. Okay, this is initial consolidation, run to support, run to resistance, retest the initial consolidations high, rally back up. So what we are anticipating now is smart money reversal anywhere between this high and this low. Okay, invalidation is if it closes above this this high, this line, this blue line. That's the high of the TR candle, and that is the candle, that is the time reference candle. That's the candle that the algos generally tend to like reference. Okay, so that's my expectation for the week. If you have questions, feel free to drop them on the comment section, or you can also drop them on the Telegram group chat. Okay, so I'll see you in the next video.